all that. And we are live and recording ABA Investing Workshop. I am Georgie, aka Financialism on the internet. Watch out for fake accounts because they will message you and ask you to invest in Bitcoin. Don't do that. Now, I'm not saying don't invest in Bitcoin, but definitely don't listen to those fake accounts. Double check you're engaging with a real account. So I really don't care if your camera's on and off. Sometimes I get to see your wonderful faces, and I always love that. That's a lot of fun for me. Stay muted. If you flush a toilet, I'll stop talking for at least a minute. Even the thought of that makes me stop talking right now. Okay, so we're gonna stay trauma informed, right? We're gonna think about money and all the trauma that comes with money. There's not one person who is not impacted by a money trauma experience. We've all been there and we'll be there again and again and again. There's people who have barely $1 to their name who go through money trauma, and people who have 5 million in stocks who go through money trauma. So I'm not going to make this a competition who has it worse, who has it better, but that just goes, in fact, I'm not trying to dismiss anyone's struggle here. I might be pulling these numbers out. These are all hypothetical examples, except for my own example. And I will show you my numbers and how I did that and made it happen. But no one's being teased. I don't care where you are. You could be 65 years old with negative income or negative net worth. You could be 4 years old with $4 million. This is trying to be all inclusive here. But it is hard to always have every type of story accounted for. So I'm not dismissing your pain at all. In fact, I'm going to use your pain to hopefully motivate you. So who am I? I'm Georgie. I was an RBT in 2015. Well, I started ABA, Applied Behavior Analysis, working with kids on the autism spectrum in 2015. I ended up loving it. I first graduated from UCLA and had no direction. I worked at a restaurant. I did parties for kids on the weekend. And then I started my ABA job, and I was working 7 days a week until my grandpa passed away. And then I thought, what am I doing this for? Right? Like, that's my grandpa. And I remember I had a new client the same day my grandpa died. And after he died, I don't know what went over me. I went to my new client and we had a good session. And that was traumatic because I was very, very close with my grandpa. So sometimes with money, we act very irrationally. I mean, a death in the family, and I'm like, okay, got to go to work. Because my grandpa went to work, my grandma went to work, saved up every dollar. So I do have that in me, this weird scarcity type thing where it's like, this is my opportunity to work. And I didn't have one because I couldn't find a job for so long once I graduated, at least for 3 months. And luckily, my mom supported me, my grandpa supported me. And I was very, very fortunate for that privilege. But, it's okay to take a break. We're no longer all going to struggle forever. And once you're in that position, it's okay. Just, your grandpa died, man. Stay home. My supervisor was shocked I showed up. But anyways, TMI. I was born in Ukraine. Obviously, there's a lot happening there. And if you're impacted by that, I'm very sorry for you. We have family. I'm actually hosting kind of a refugee. One of my relatives, they came to live with us. And if anyone's interested in learning more about that, feel free to message me on Instagram. You can sponsor someone very easily from Ukraine and they could come live with you. Now I'm a BCBA that started in 2019. And that's not the moment where my wealth picked up, because I had my first $100,000 before I became a BCBA. And the only reason I was able to make that happen, well, okay, it's a lot of variables, but the main reason was I didn't wait for me to have more money to start investing. As soon as I learned what this is, as soon as I listened to 6 90-year-olds talk about it in the same way, I was like, okay, these 90-year-olds, they know way, way, way more than the Fox News, CNN people who are saying the market is crashing, sell everything. So I'm going to listen to the OGs. I'm going to listen to the Warren Buffetts, the Jack Bogles, the founders of Vanguard, right? That's who I'm going to listen to. People who lead these corporations, who've been born even before the Great Depression, like Charlie Munger. That's who I'm going to listen to, and where most of my investing philosophy is going to come from, besides my own personal experience and more kind of modern views at things like with crypto and NFTs and even trading cards. That being said, there is definitely a lot of scary, scary stuff in the news. And I don't think it's a coincidence. So there's actually people who benefit off of stock market crashes. You can bet that the market's going to crash, and you can bet that these people work in huge hedge funds, Wall Street. So what are they going to do? They're going to pay a couple $1,000s for some news articles, right? To scare people into selling their stocks further. Now, this is Illuminati conspiracy theories. Don't take this with a grain of salt, but just know there are people who benefit off of the masses being scared of investing. And it's usually people who are male and pale and kind of look like this. So can you trust me? I don't know. But this has been going on for decades. Obviously, you don't need to know about the market to know that it is manipulated in some way or form. And it's really not the market that's manipulated, but our emotions, which are private events that lead to us behaving in some shape or form. So I want you to keep that in mind. And by the way, I need to interrupt myself. I know I'm going to be talking fast here. So if you have any questions at any point, just type it in the chat. Okay. And that way you can remember it for later. So right now, stocks are down 20%. What the heck does that mean? Well, that's 1/5. Yes. So whatever's in your 401k, it's cut by 1/5. I don't know if you noticed that. If you're in your Roth IRAs, it's cut by 1/5. Everything is cut by 1/5 right now. And that's very scary. It's not good. For me, I got to the point where I invested so much over the years that when the market drops like this, I basically have more loss from my net worth than I make in a whole year at work. And I love it. I love it because it creates an opportunity to buy more stocks. I think of the stock market kind of like a bow and arrow. The further you pull back, the more that arrow is going to go. And that has been the case for the last, well, since the inception of the stock market. Every time the market crashed, people said this time is different. Well, of course it's different. Otherwise, the market wouldn't crash. We would be ready for it. We're supposed to be caught off guard. But if you have a long-term, rule-governed approach, you're going to be fine. So money, MOs, right? Satiation, deprivation, hunger, all that inspires us and our journeys for investing. So when it comes to Casey and Cassandra, two hypothetical people, they don't exist. They're new BCBAs, and they just got a whole bunch of more money, right? They're making, I think, about $79,000 each. This is their expenses broken down, right? Maybe they're lucky, maybe they're not lucky. I don't know. That's up to you guys to decide and compare yourselves to these hypothetical people if you want to. But this is a way to break down their income. So they make about $4,100 a month. A lot of people start salivating at this because they love breaking down these numbers, but you don't have to, right? I hate this stuff. I do this about once every 2 to 3 months, and then I seriously sit down for an hour and really crunch through a year's worth once a year at the end of the year. So I'm coming there. I use different behavioral approaches for myself. This isn't, some things are preferable to others and aversive to others. But sometimes I really do like this, you know, that one kid that you work with that hates ketchup, and then one day they love ketchup. That'll never be me. I hate ketchup. Casey has a total cash surplus of $900 a month based on this example here. So what's she going to do with it? It's her first time she has $900 left over. She's going to go to Target. She's going to meet all her buddies there. Then she's going to go shopping. She's going to get wine. She's going to get DoorDash. By the way, with DoorDash, you pay like 7 times more for a meal than you would have if you just bought it at Costco. I'm just saying. No shame, right? Every now and then, right? If you're pregnant or something like that, you're not going to go to Costco. I get it. So don't think I'm shaming anyone, but I just want you to be mindful of what you're really paying for. Like, do you really need to pay times 7 for that type of service? You're going to go to Disneyland. She even goes to Disneyland, but she has a more responsible friend, Sandra. Sandra has $900 a month left over too. They make the same amount of money, same type of situation. And the reason here, I'm showing 2 different paths, but this isn't what you expect. So she's saying, I have 900 left over. What do I care about doing? So what's she doing here? Let's think about this. She's doing what we do. We tell all of our behavior therapists to do this, a preference assessment. How the heck are you going to give them an iPad if they're not interested in the iPad? That's no longer a reinforcer. That's just an item that they like every now and then. So in that moment, what do you care about doing? Let's think about your future. We can time travel in our heads. What are we gonna be reinforced by in the future. That all matters. So Sandra very responsibly decides she's going to conduct this preference assessment. And she realizes something very important. She loves Target. She goes to Target. She spends all her money there. Then she gets the same DoorDash. She gets the one. She gets the Tesla. She probably returns the Tesla later, realizing that was a mistake. Then she goes to Disney, spends all of her money, and we're kind of back where we started. But after that first month, after you have that new money as a BCBA coming in, or you have a new mindset about money coming in, transforming what you do with it, you're going to have a long-term plan. This is a rough example of what a long-term plan looks like. If you're a BCBA, if you're into behavior analysis, you know there is no general plan. Everything is individualized. There's no, what stock should I invest in? And an answer. It's like, what behavior should I target? I need to know your life story. I need to watch that kid or client for a long time, or at least a couple of weeks before I really can make something that makes sense, or sessions across time. So this is just generally speaking. Casey continues with the behavior of month one, but she saves $500 a month forever. So she takes some responsibility and for saving, right, for her future. 35 years later, she has $210,000. There's not a lot of people in their 60s or even 70s that have $210,000, right? And if you are in your 60s or your 70s, I don't know if you have $200,000 plus, right? It's kind of like this thing, things will be fine later. No, they're not going to be fine magically, right? Now, the government in the United States will pay you a certain amount of money per year, Social Security, but who knows if we can count on that in the future. In the short term, definitely you can. So Sandra continues, but she places rules on what she can spend. So she saves $500 a month, creating a 6-month emergency fund for emergencies. These are the known unknowns. We're gonna have tires pop. We're gonna have a kid being rushed to emergency. We're gonna have a broken toe. It's gonna happen. You're gonna be a human and you're gonna have errors or mistakes. So you'll hit a car. Knock on wood, no one here will do that. But after her 6-month emergencies are covered, she starts investing $700 a month. And then, sorry, my bad. During her emergency fund building, she realizes she can also be investing at the same time. So she breaks it down where she gradually builds that emergency fund. But after the first month or two, she just starts investing in stocks or anything else. She invests $1,000 a month. Now, if it was stocks, right? We actually have the numbers to prove if she did this for the 35 years, because we can look at history and see where we would be at. But instead of looking at the exact numbers, which are higher than what I'm about to show you, you will be in basically 1.4 million. This is about a 8% return, and the last 40 years gave us 11. So our historic 100% return for the stock market is 10% annualized average. She would be looking at 2.7 million. So people who started this process 35 years ago are looking at 2.7 million plus. It's actually closer to 3 million. Yes, even with this 1/5 stock market crash. So all of them right now are down about $800,000. But who cares if you're down $800,000 if the market gave you 3 million? That's just the way humans are, right? If I give each of you 20 bucks, you'll be so happy. But if next week I ask you for $10 back, you'll look at me with suspicion. Okay, but if I just gave you $10 and never asked for anything back, you would love me. It's the same outcome, but something about giving money back makes us cringe. Same thing with the stock market, except instead of $10, we're talking hundreds of thousands of dollars over the long term. It might be tens of thousands over a short term, or thousands, even hundreds. Order of operations. This is, again, a cookie cutter type of approach. This is by no means advice, financial advice. I do financial coaching and stuff like that. We could always talk about that. Behavioral financial coaching as a BCBA. That's one-on-one. I've been doing that for a while. We can always talk about that more later. But this is kind of a standard approach. 1 to 2 months of emergency fund built. 401k if the match is over 20%. What the heck does that even mean? This guy's talking way too fast. Again, use the chat. to type questions in. I'm basically a ×2 speed YouTube video. I watch all my videos on ×2. So when I make videos, I'm already talking on ×2. So it's like ×4 for people who are watching the playback and X2ing it. But anyways, a 401k is an employee sponsored account, and you can invest in the total stock market, top 500 companies, target date funds, mutual funds. There's just so many options to go through. And this isn't the workshop to discuss those options. But if you have a match, then you're going to receive extra money on top of it. So let's think about this for a second. If you have a 401k, right, and you invest $1 inside of it, and your employer says, we'll give you 20% on top of that. Well, now you have $1.20. That is beating most credit card debt. So if you do have credit card debt, it makes sense to still, if you're trying to grow the most amount of wealth in your lifetime, it makes sense to invest in the 401k over paying down your credit card debt faster, just because of that match. Now, sometimes 403bs have a match as well, and a lot of bigger companies give 100% matches in their 401ks. After that, I would pay off credit card debt, because you're not going to beat credit card debt with the stock market. That breaks a lot of hearts. I know half the people just hopped off right now, right? You heard that, but it's just the reality, guys. Most of the time, not all of the time, but most of the time, credit cards are a business. They profit off of our flaws, and these are evolutionary flaws. We can beat them, but it takes a skill set. After you pay off that credit card debt, you can build the rest of your emergency fund gradually while investing. And what does investing mean? How do we operationally define that? Well, there's so many different ways. And here it could be talking about a regular brokerage account, a 401k account, a Roth IRA account, a business account. So yeah, I know a lot of people say, what stocks should I buy? The real question is, where is convenient to buy them? Do I buy them in a brokerage? Depends on your personal circumstances. Do I do it in a 401k? Depends on your personal circumstances. Roth IRA, personal circumstances. Business account, personal circumstances, right? It's all individualized, but the more knowledge you have, the more rational a decision you can make. And sometimes the decision is all of them. For me, I like investing in the brokerage account, and my reason is, yes, I will eventually pay taxes on that money, except there are laws in the United States where I could get around paying taxes on that without being a billionaire. I bet you guys didn't know that. No, some of you did definitely know that. But if you withdraw if your total income is about $45,000, it's increasing next year. You can withdraw with zero taxes. But when you withdraw money from stocks, that counts as income. So what if you don't have a job and you have $1 million in stocks and you withdraw 40,000? You're a millionaire who just paid $0 in taxes for 40,000. That's pretty cool. Whether you like it or not, that's the system. And it's not all for billionaires. I'm just saying, like, I don't know if it's fair or not, but these are the rules that we are given. And most people complain, and that's healthy. But most people complain without thinking about the other side of the spectrum. How can I take advantage of the rules, right? Any game we play, we're trying to win. You can't win without the rules. So this is me playing by the rules. Now, right now, actually, I probably have less than this. This is my brokerage account. This is where I am investing for the long haul. You can see my positions are hidden. I don't want to influence anyone. Every now and then I just show them, and I'm like, I need to think about the consequences of just showing this. Now, this is not the flex. This is not the stunt. This is to show you that this is real. And people who are, I'm pretty sure there's a number of people here, probably all of you, who are way smarter than me. But the only difference between us is I listened to the 90-year-olds that were born in the Great Depression and beyond. And I took them seriously on their life advice when it comes to investing. Now, I didn't know them personally. I YouTubed them. But to sort like what's real, what's fake, that takes a long time. It took me about 7 years, and I did make mistakes along the way. If I didn't make those mistakes, I would probably be looking at a net worth that is honestly X2 of where I'm at. With the stock market crash, I think I'm back to about probably 250s and my maximum was about 340. So even measuring net worth doesn't really tell you how rich you are, because that number fluctuates, right? You can't just say how much money do you have. That's an old way of thinking. That's savings. What I like to count is how many shares of these companies do I have? That is what matters. 100 shares of Vanguard's 500 index fund. That's awesome. I know that in 20 years, that's going to be worth most likely way more. And actually, I have a 99.99999% chance that it will be worth way more in 20 years. The research has already been done on that. That's the top 500 companies. Let's move on ahead. I'm going to skip through this. We already talked about all this stuff in a way or form. So chapter 2, tokens and time travel. Investing is time travel. Money is time, right? We all heard that expression, but most people don't really think about that and what that means. To me, it's not just companies, right? I'm not looking at dollar amounts or percentages. I'm looking at time. But before we talk about that, what the heck is a stock? A stock, you could think of it as a fruit, right? You think this apple business, fruits, is really profitable. You don't have $2.8 trillion to buy the company, but you do have 250 bucks. So you could buy 250 bucks of that company. Now, if that company becomes a $6 trillion company, then your $250 becomes about $520. You don't pay any taxes until you sell it. And it depends on what account it's in. You might pay zero. And we talked about brokerage accounts and all tricks there. So here's some cool operational definitions that I use to define the stock market. There's many ways to think about it. A collection of people's buying and selling behaviors measured in stock price. A marketplace where people click buttons to purchase or sell pieces of companies. A time machine or token economy. A token economy. Let's break that down real quick, and then we'll we're almost close to wrapping this up and opening the Q&A, but there's still, I want to pack as much information in this as possible. So a token economy. Imagine you had 20,000 tokens, dollars, right? Read between the lines. You got 20K in 1990. If you kept it today, you would have about $9,000 worth of purchasing power. Now your bank account will say 20,000, right? You'll be like, I didn't lose anything. Yeah, you did. Because in 1990, you could probably buy 2 $1 bags of chips for $1. A bag of Lay's was probably like, what, 49 cents? I wasn't around back then in 1990, but we do know that Coca-Cola cans used to be 5 cents, right? The price increases. No, it's not the price that's increasing. It's the value of the dollar that's decreasing. It's an illusion. So I do want to know if you guys like token economies, so feel free to type in if you use them or not. That's just for me. I always ask this question. I'm very curious how you use token economies. I feel like Board Certified Behavior Analysts, RBTs, we don't really tap into the full power of token economies. And I cannot wait for what you will do with them once you realize what the stock market is, because it will give you schedules of reinforcement like nothing else. Or will it? Now, what if you invested $20,000 in 1990? Well, today it would be about $105,000. Not bad. Now, I didn't account for inflation, so it's still way more than you would have had if you didn't invest. Way more, and you would be looking at 105,000 points in your investment accounts. We got to stop saying, how big is your bank account? Hopefully really small, because everything's invested. So like I said, you could use the tool we use to measure, right? How we measure something creates a whole entire framework, right? So if we're using frequency data, how many times does something happen? That doesn't tell us how intense a behavior was. That doesn't tell us how long the behavior was. So we have to use our clinical judgment. We have to think, right? What is the best way to measure a behavior of interest? Well, when it comes to money and wealth, we have to think, what is the best way to measure it for our own lives, right? Is it healthy for us to always think about it in terms of numbers? I don't know. For me, I don't really have a huge problem with it, but for some people, it could create a lot of anxiety. Percentages. I love percentages. You might hate percentages and you still hate your third grade teacher. No offense if you're a third grade teacher. I love my third grade teachers, and I was in third grade when 9/11 happened, and my teacher had my back. She had the whole class's back. Never going to forget Miss Finer and Miss Cottrell. I actually still talk to her. And you can think of money as time. So when the stock market goes up, I'm not just making money. I'm making PTO days. My goal is infinity PTO. And hopefully there's at least a few of you who have the same goal and are in a position to attain it. This is just my own thought experiment. I'm going to skip this we don't need to look at this. This was just me nerding out and trying to calculate how much time do we actually get when this stock goes up over the last 5 years. But I calculated if you make $55 an hour for every, I think, share for every $55 that you spent, you got 3 hours and 3.85 hours back earned. It's as if you worked an extra 3.85 hours, but we're not going to delve into that. If you want to nerd out with me about numbers later, feel free to find me in the after hours Zoom. No, there's no after hours Zoom. That got canceled. Chapter 3, seek reinforcement from the stock market and get wrecked. Whenever we try to reinforce ourselves with the stock market, we will die. We will lose. This is not about reinforcement, guys. And this is why, as a lot of you are probably behavior analysts, you're not investors, because there is no reinforcement. It's not about reinforcement. Day traders, people who buy and sell stocks every minute, hour, couple of days, that's reinforcement. But the data says they will end up having way less money than they otherwise would have. Most people end up losing in the red within 5 years. And within 20 years, there's about 3% of people who made money. And just because you made money day trading does not mean that you beat someone who just parked their money in the market and rode out all the lows and the highs and just kept on investing for the long term. And when you're day trading, you have to pay big taxes on that, unless you're smart and you create a fund inside of your Roth IRA where you don't pay taxes for trading stocks or profiting off stocks in the short term. Then that could be kind of cool. There's a strategy for anything. I'm not dissing day traders. If that's something you're passionate about or want to get into, I'm not dissing you. I'm just saying the odds are not in your favor, and that is just a fact, proven time and time again. But even your boy sometimes sees a deal or thinks I see a deal, and I will try my luck there. But it is more about luck when it comes to day trading. So if it's not reinforcement, what the heck is happening? What the heck is sustaining our behavior? Well, there's little indirect reinforcements like talking about it, right? That's exciting to me. But it's really rule-governed behavior that's at play here. If I invest $700 a month into stocks, I'll get my portfolio to fund my future vacations and pay for all of my groceries. So that reward is only available if you do this incrementally. You need the amount of time. You need to actually click the buttons on the keyboard and know how it works. That's it. But if you invest the same amount of money 20 years later, your result will not be the same. It is better to incrementally invest than to wait until you have a buttload of money and put it all into the market. Now, if it's the other way around and you already have a buttload of money, the data does say it is better 66% of the time, so the odds are in your favor, to invest the buttload of money and then incrementally invest from then on. Now, the human thing to do is to break it up into bigger chunks up front and then spread it out. That all depends on you, your psychology. You know what you're anxious about, what you're not anxious about. Guys, I have had days where I looked at my stock portfolio. You're not supposed to do this. All the books say do not look. And I was down like 10 grand, right? I'm not going to make that in a day at work, but it no longer impacts me because this is not where my values lie. This is something that I know the data on. I know the science is in. I know the history is the history, which is not promised to repeat itself, but most likely will. Brain fart. Someone just turned off the lights and turned it back on. Probably someone's flushing a toilet right now. Okay, so when it comes, I'm gonna just skip to the next part. Should I pay off my debt first? This is something that I want to throw in here because, again, I want to give you as much information as you can so you can make the most sound decisions in your life. If someone wants to remind me of what I was saying earlier, we can come back to that in the Q&A. But when it comes to negative reinforcement or positive reinforcement, right? Paying off debt, that's negative reinforcement. You're getting rid of something, and that increases your behavior of getting rid of something. I don't know if that's true reinforcement because your rate of behavior stays the same. Maybe your intensity of behavior increases. And so that's why we could call it reinforcement, but we can also nerd out about that in the after hours Zoom. And then there's positive reinforcement, investing to grow your net worth. Well, both of these grow your net worth. But that's why I like to frame everything as positive reinforcement, because getting rid of debt, you're growing your net worth. You're getting closer to zero, which is awesome. Or you can be a millionaire and still have debt. And that's okay. That's part of your strategy. Sometimes I take debt out to make deals. Face fear and anxiety, just like most of our clients or our kids do on the daily when we teach them new things. Okay, so this is very important. We have our kids try new foods. We have them listen to music at slightly higher volumes gradually every day. We have them go down on slides on a hot day. It might shock you. We do all of this for them, and they have fear. They have anxiety. They do it anyways. Why? Because we have their backs. But do you have your back? That's my question. I'm not trying to shame anyone, but when was the last time you did something on purpose that caused you fear and anxiety and you faced it head on? Now, whether you're a fan of him or not, there's a really cool Jordan Peterson analogy. I know a lot of people roll their eyes. Okay, it's okay. I'm here for the wisdom that people provide. Whether or not you agree with their political views or not, that doesn't matter to me. What matters to me is their wisdom, and I'm taking it and using it. So there's a cool story that he told about anxiety, and he described anxiety as a dragon that lives in your closet, and it feeds on darkness. So the longer it's in there, the bigger it's going to get. So the answer is you have to open as fast as you can and go see the dragon. The problem is you have to see a dragon in your closet. That's scary. So when it comes to stocks, the quicker you'll be rewarded is the quicker you make a move. Latency is the number one variable, the number one thing that I measure to determine if someone is going to be successful in the market or not. That is what is important. How fast does it take for you to start? So the stock market is going to crash. That's a fact. It'll do this twice a decade, maybe 3 times, maybe 4 times. It already happened twice in the last 3 years alone, but it hasn't happened before that for 12 years, right? Since 2008 and a half. So it's going to happen, and it's a normal part of the market. You have to accept it. Is the stock market going to crash again? People don't know. Right now, we're in a stock market crash, and not a lot of people are excited buying stocks like me. I'm excited because, one, I know history, and 2, I trust the 90-year-olds, and 3, I've done this before. In 2020, my mom was screaming. She was like, son, how could you be buying stocks right now? It's a pandemic. This hasn't happened in 100 years. And I'm like, excellent. My evil capitalist self awoken, and I knew there was opportunity. Blood in the streets, that means there's profit to be made. So that's when I separate my emotional side and I go in and I buy stocks. It sucked. I did not separate my emotional side. I lost, basically, I was down. I didn't lose because I didn't sell anything. I was down almost all of my gains over the last 4 years in about a week's time. That's okay, because the market has never not recovered. It recovered every single time. And so people who keep investing during this time, only they will be rewarded. And here's proof. Here's an image of the gnarliest stock market crashes in the last 120 years, 140 years, and every single time it recovered. Long-term investing. I already mentioned the statistic. You have a 99.9% chance to have more money than you started with in a 20-year period. What do I do now? Well, let me tell you, this is the last chapter, guys. Self-management and behavioral change. I want you guys to create a Webull account. Now, the reason why I say Webull is because they pay me money and they pay you money, but there's other accounts to be made. There's Fidelity, there's Charles Schwab, there's Vanguard. I'm not a fan of Vanguard, but Webull is a great place to start first. Now, I wouldn't be talking about it if I didn't think it was a great place to start. I use it myself. Now, I don't use it for all of my investments, but it is important to have multiple investing accounts. One, they all pay you great money, but two, from sign-up bonuses and stuff like that. But two is because each investing firm has an insurance policy on if something goes wrong. And if you have, say, only one investing account and you're building like $1 million in there, $2 million in there, they're not insured for that much. It goes up to, I believe, $500,000 for most places. I know M1 Finance, I read their fine print, goes up to 500K. So it is important to spread this out. Like if you have a Roth IRA, I wouldn't have it in the same place that I have your brokerage, right? I wouldn't have it in the same place you have your 401k. I would spread it across. It's a little bit of extra work, but it's a few minutes for a lifetime of, hey, I'm insured, I'm good. Now remember, you're not insured if your stocks go to zero. You're insured if the platform goes under. That's a huge difference. Your stocks go to zero, they go to zero. But when it comes to funds, those can't go to zero because there's multiple companies inside of those. I want you to set automatic contributions. The greatest investors do this automatically. Record the behavior. Make an Instagram post about it. Tag me. I want to see you guys building. Tell a friend, right? Tell a friend, hey, I set this up. I'm doing this. So please do this. I will send you a link afterwards. You will get like $40 for 3 minutes work. And you'll create your investing account. Webull has Roth IRAs and brokerage accounts. You could create both. It'll only pay you one time, and then have your spouse, have your partner create an account as well. And then both of you will walk away a grand total of around $100 for a few minutes work. So make sure you do that. Again, I am affiliated with Webull, but there's Fidelity, there's Charles Schwab, there's Vanguard, there's even Robinhood, which got a lot of haters, but I think it gets the job done. So there's a lot of different options out there. They each have pros and cons. Fidelity has cons that you can't make trades during outside of the market hours. On Webull, you can place a trade after market hours. So that's a con or a con and a pro. But Fidelity's been around longer, if that makes you feel better. Here are some free resources for you guys. This is a ABA group called Financial Flexibility. Sometimes I lurk in over there. We all nerd out about behavior and finance. So if you're into ABA and trying to get into finance, that's an amazing group. The Simple Path to Wealth, there is a free YouTube video of an audiobook of that book, and I listen to it X2 speed. Strategic Dividend Investor, that's more for my dividend friends. We didn't really talk too much about dividends, but that is a whole other investing strategy where you're investing not for net worth, but for cash flow, which is usually comes with net worth growth. Now, part of my portfolio is purely dividend tailored. And the more you have under your arsenal, just like an ABA, the more you can do. I mean, most people just stick with like simple schedules of reinforcement, but once you hit those compound schedules, once you hit those mixed schedules, you get some amazing motivation in our clients, at least from what I see. The Intelligent Investor is a book that's very dense. This is for my heavy readers by Benjamin Graham. Benjamin Graham is the teacher of Warren Buffett, arguably one of the greatest investors of the modern era. Still kicking butt and learning. The Money Tree Investing Podcast, it is a little bit dry sometimes, but your boy listened to the first 120 episodes or so. Choose Fi is a lot more woohoo. So they're a lot of fun. They actually have really enticing advertisements on there, but Choose Fi is also a really fun way to learn finances for free while you drive and all that. Now your boy also has services. I am creating, and I promise I won't take up too much time doing this. This is my my gift shop, but I'm creating Investing Journeys, which launches on January 1st. So what this is, I do have a stock market 101 course, which 150 people were a part of. I've done many workshops. This is a free one, so, you know, I hope you got your value's worth. You paid nothing for this but your time. But Investing Journey focuses on money management for kids too, right? How to invest for kids, credit card practices, you can actually get paid $1,000 to $2,000 a year by churning credit cards, getting the points, knowing which ones to target in the United States. But this works in Canada, this works in Europe. It just you'll have to do a little bit more research if you're in other places. But in the United States, we have so much privilege. I think Canada is really amazing too. And you shouldn't be paying too much for traveling. People who master this skill set, they end up traveling. I know someone who makes $48,000 a year who traveled to 27 countries just knowing how to abuse these credit card companies because they will abuse you. So if you know the rules, you can take advantage. Investing accounts, right? How to organize your investing accounts. I showed you one sample here, but there's so many ways to do this. There's this thing called an all-weather portfolio. It's both defensive and aggressive, and it's supposed to shield you from crashes. So there's so many ways to think about investing. I want you to be armed with how 401ks work, Roth IRAs, dividends, ETFs, mutual funds, stock positions, what I do personally, and just the rules behind these, the niche rules too. Here's a freebie that I know. And one for 401ks is most people think this is money for age 60 plus. You can access that money early. If you leave your job or your job leaves you and you wait 5 years and you roll it over into a traditional IRA, you can pay the taxes that you owe if you owe any, and you could transfer to a Roth IRA, bypass the $6,000 limit, which is going to $6,500. And now you have all that money tax-free in 5 years through the Roth IRA. And this is why some people choose to only invest in 401ks, and they bypass all sorts of gnarly rules. Not everyone's allowed to invest in the Roth IRA. If you make over 140 grand, you can't do it. So, but you can lower your income by investing in the 401k, and then you can have access to the Roth IRA. I had a student from Stock Market 101, who was on the cusp. She had a really good problem. She was making just a little too much to qualify for the Roth IRA, and she lowered her expenses and went in. Now, she actually visited a tax professional who told her she cannot do that. We looked. Every single source said, you can do this. So even tax professionals get it wrong. I'm just here for the behavioral aspects of it, but your boy did his research. I have disagreements with my own brokerage platform over how taxes should work, because this is a gray space, but this does work 100% right now. Alternative investments, this is something I'm a really big fan of, and it's becoming more mainstream in the industry, where there's an investing app called Public, which is pretty big. It's like a little Robinhood, Webull type firm, but they just purchased an alternative investing platform, which means you can invest in alcohol. You can invest, I don't invest in alcohol. I never drink alcohol. I hate alcohol. I drank it once by accident, and I just was like, okay, this is an accident. I didn't make this choice. It's okay. My mom forgave me. And my mom and I made a bet that I can't drink alcohol until I'm age 30, and then she will owe me thousands of dollars. And we signed this. It's a contract. We have it from when I was 7 years old, and time's almost up, Mom. She actually is getting really nervous about that. She's actually excited. And the other one was like, you can't say bad words. I've never said the F word, never said the B word, all because of what I signed at age 7. I was like, I'm taking this seriously. I want that money. I even did 5-to-1 odds with her. I was like, if I mess up, I'll pay you 5 times more. She could not refuse. She messed up. Cryptocurrencies, NFTs, all alternative platforms, but Public is offering like trading cards, things like that. And I have about 15% of my whole entire net worth inside of alternative assets. I think this is crucial. People like Jeff Bezos, you only hear about him in Amazon, but if you go to a Star Trek convention, you're going to find one thing that belongs to Jeff Bezos that is an exclusive item. Money can't buy that after a certain point. The populations are low, and I think it's important for modern day investors to know how to invest in alternative assets before it takes off. But like I said, it's a small percentage of my overall portfolio, but those little strategies where you focus really heavily on 1 to 2% of your portfolio, 10% of your portfolio, can make a huge difference. With Fidelity, they did a research study on cryptocurrency, and if you were selling everything at the top of the bull market, a 3% investment in something like Bitcoin could make you a huge, like 5-figure difference in just about a year's worth or 2 years worth. So that's something that I focus a lot on, even though I don't want anyone investing majority of their money into this stuff. It is highly speculative. Tax rules, writing off losses, how to do it, stock market crashes. And I always look for freebies. I know Mike probably made like close to $800 just coming to my free workshops. No, Mike, you went to some paid ones. And taking advantage of all the links that I provide. And guys, I do not profit off most of the links that I give you, right? There was a Christmas promotion from Fidelity or Hanukkah promotion, holiday promotion. They gave $150 out. I took advantage, but those are the types of things that I look for. It's my hobby. And through this Investing Journeys course, you will have access to my list that I will keep on updating. So there's way more to Investing Journeys, and maybe I'll show you a little clip in my Q&A. But we will also have quarterly meetings, and I am putting the whole thing on sale for until the first week of January. So until January 7th, you want to start your New Year's resolution a little late? Don't be late. You can do that. Right now, it's a pre-sale. So if you purchase it, you don't have access until the 1st. With that being said, here's some testimonials, people really, really happy, and we will open up the Q&A, but I just want to read at least one of these real quick. Maria, she warms my heart. She comes to my Zoom nights that I would host, and it says, I just want to say that the hour I spend here every week, I did not pay her to say this, can make me leaves me with such a high for the next days. I enjoy learning from everyone else. So I am trying to build communities within my workshops, within my courses, and I've been doing this for a while. I know I'm bringing value because I think about what did I need when I started investing, how much would I pay for that value, and just trying to make it all worth it in the end. And so far I have 0 complaints, 0 people asking for their money back, and I've had hundreds of students. So yeah, there's also a refund policy. If you hate it, if you feel like I scammed you or something like that, just ask for your money back. It's that simple. As a special gift, I'll be selecting 3 people around February to have a one-on-one coaching session with, just to go over their personal stuff. And I do charge, that's how much I actually charge. People do pay this for my one-on-one coaching sessions, which does come with you answering some questions beforehand. Then I pay for my time. And then I also answer all your messages through Instagram. With that being said, if you guys want to take a screenshot of this, feel free to. Now you don't have to go off camera right now, but I am going to take a picture right now. If you want to turn on your cameras real quick, smile for the camera, that would be really, really nice. That would be really, really helpful. It's the least I asked for. It's the least I asked for. You don't have to do that, but I am going to take a screenshot in about 30 seconds. So if you want to just do that real quick, everybody put a smile on, show some love. It's so cool because I know some of you by your Instagrams or your Facebook profiles, and like seeing your faces right now, I'm like, they're real humans. They're real. I love to see it. I'm just lagging here for a second real quick. Gonna make this a little wider. All right, guys, in 3, 2, 1, let's do a big old smile. Hold on, I'm gonna actually screen share. Smile, make sure your dog's smiling too. Okay, we're good to go. Okay, if you guys are naked, please put everything away. Put everything away. I don't want to see it anymore. You should charge people for that. So with that, guys, again, obviously, I'm very excited about what I just talked about. I'm excited about Investing Journeys. I've never ever okay, a secret. I took everything from Stock Market 101, and I realized that people need more than just stocks. So that's why I decided to do the opposite of what you're supposed to when you're doing a course. And I want it to be all inclusive. And that's what I did. Still trying to make it more inclusive with like captions and all that. But I think I'm pretty proud of what I have. So with that, I'm going to stop sharing. I'll probably show some more. Oh my gosh, you guys sent a lot of questions and stuff like that. Oh man, there's like 26 messages here. I'm gonna open up to a microphone, so you guys can ask a question on the mic before I start reading. So fight for the microphone. If you have been coming to these workshops, I encourage you to hold back a little bit, let someone new ask a question, and even if it's quiet for a little bit, that's okay.
Just thought maybe you could say how much your membership is. Hi, thanks for doing this.
For Stock Market 101, it's about 209. No, I think it's 300 for Stock Market 101. For Investing Journeys until January 7th, it is $400 with the discount code. I want you guys to go read through that. You do get almost all of your initial investment that you can put in the course back, because you can look at what Texas Finance is saying, that I have found him more than $800 from all of the links that I have sent all of my students, et cetera, et cetera. So yes, this does encourage you to actually take action. And I did the math on this. It will definitely price some people out, but I'm doing that on purpose for quality. And I also believe that it is a very fair price, and people do charge more. And I could show you a little bit more about that if you'd like, but feel free to look through the site. It's on my Instagram page. In the link, it'll say Investing Journeys. Do not buy it without using the coupon code. So please message me for a coupon code, or else it just won't be applied. And after January 7th, I do increase the price back to what it should be. So I hope that answers your question. I like to be direct with money stuff. I know a lot of people bounce around it, but that is what it is.
You mean
And
for the year?
huh?
You mean annual, right? An
No, not annual.
annual,
It's just
or
one
what?
time.
What, one time?
Yeah, you just do it one time. That's it. And that's all.
Okay.
Yeah. So especially if you're in the United States, with all of the bonuses that I do find, you do get way more than that back, but you have to take action, actually go through with it and do it. I'll show you guys a slide, but is there any questions, stuff that maybe I talk too fast through? Because I want to make sure you guys get your values worth here. It can be about ABA, you guys could vent. And I'll show you guys some cool images that I got right here for you guys. Or you guys are very shy with your voice. I know you typed it in below.
I don't want to keep talking, but I could ask something else, but
Sure,
I don't want to. Okay. So I just came from the bank, and I'm at the point where I'm saying, yes, I could pay off all my credit debt. That's like anywhere from 17 to 20% versus and investing. I'm not sure how. I want to learn how to think about this, which is what you're doing. With creating my habits. That's why I think it's so cool that you pair your behavior work with doing this. It's so perfect. It really is about our habits and behaviors, but with the education. So I'm feeling energized on just getting rid of all that credit card debt, because I do have some money to do that with, versus and looking at it as saying, that's how I'm gaining in my life, because I just got rid of those finance charges.
Exactly. Let me interrupt you real quick and just say that no matter what decision you make with that, you're making the right decision. Like, you're stuck between a great decision and a great decision, right? So yeah, you're in a good place, and I'm glad that you're taking action over that.
So then I want to learn what to put, what I was paying towards all my credit, like, then how do I learn how to invest? That is why I keep hanging out with you.
Yeah. So like I said, I like index funds, but it really depends what account you're investing inside of, and that'll be up to you. That's why I'm creating this general course with all the information that you could possibly have, and you can pick and choose what applies to your life. Real quick, someone messaged me privately and says, I have always been hesitant investing in crypto. How do you go about mitigating the risk there? So if you guys can see my screen real quick, I'm going to go through that part of Investing Journeys where we do talk about it. So it's going to be it's broken down into 10 different chapters, and chapter 9 is going to be about the future of money and cryptocurrencies. When it comes to cryptocurrencies, my personal strategy is right now, while we're in a crypto crash, and I'm talking Great Depression, like this is the Great Depression of cryptocurrency for the 5th time in the last decade. Every single time people said it's over. It could be over, but it was over 5 times already. So I invest about 8% of my income into different crypto projects. The main one I invest in is Ethereum. And that's because I'm a big fan of NFTs. I know there's a lot of negative connotation with NFTs, but there is money to be made, not with just gambling or speculating. There were many opportunities throughout the last 2 years, even in recent times, where you can buy a Marvel licensed Spider-Man comic that is the first one of its kind, and it's paired with the real version, you could have spent 20 bucks doing that. And the worst case scenario is it was sold out before you click buy. The second worst case scenario is you got the most common one, and that went for about $400 for 2 weeks. And so I don't really invest in NFTs. I just flip them. And when it comes to crypto, I do hold my crypto. So it's very minor stuff. Like you could put in like 20s while in your stocks, you're putting in hundreds, right? And then you can, the only thing I would say is once you start, you can't stop. If you don't want to risk like 20 bucks a month into crypto, don't do it. Do 5, do 10. And you can do that on Webull. You could do that on even Robinhood, et cetera, et cetera. But there is a lot of trouble and risks to doing that on those platforms. You have to pull the money out. Otherwise, those platforms can shut down. And that happened to me in the past. And it's a normal part of the crypto world. That's why we have such amazing opportunities in that market. But again, 8% of my total income is going to that, compared to about 60% going towards stocks, right? So it's a small number, but it makes a huge difference if we have another bull run with crypto. So that's why I talk about crypto, and I think there's a lot of opportunity there. Texas Finance says you got Webull, M1, Fidelity, Merrill Edge, Charles Schwab. That's amazing. Sophie's asking, here's a question. If you can get most of your credit card transferred to 0% APR, how much should you focus be on paying them down versus investing excess funds outside of monthly expenses like 50-50 or nah? Sophie, that is a very smart question, and shows that you've been doing your research with credit cards. There are ways to take advantage of that, but ultimately, if you're in debt, you're in debt. One sec. Optimizing credit card, like new credit cards with that 0 APR only gives you 18 months. There's not a lot of investments that can guarantee you a profit within 18 months. Now, Tesla went up X5 in 18 months. Now it's down by half. Now imagine you invested on the other side of that. Instead of just paying off your credit card debt while it's at 0 APR, which, by the way, automatically gives you a 16 to 18% return that you're not paying, because you would have been paying interest. So that's pretty cool. But there's usually a 2 to 3% charge to transfer your credit into another credit card like that. I would say focus on getting rid of that credit card debt as fast as possible, and take advantage of let me show you right here. I call it bank farming. So this is churning credit cards. This is taking advantage of the banks when they give you promotions. That will beat stocks. That will beat crypto with 100 or 99% certainty in a very, very small increment. So you're not going to get tens of thousands of dollars doing this, but you are going to get hundreds of dollars doing this. And then you could take those hundreds and pay down your credit card debt even faster, or even invest that free money. So I hope, Sophie, that answers your questions. I know I'm going at these out of order. I'm terrible host, and even worse person. No, I'm great. I'm great, guys. The match for my employer is 3%. Natalie, I want you to really think about that, because I don't think that is 3%. I think they match up to 3% of your total income. So that's a really confusing thing when it comes to 401ks. Now, you may be correct, but most of the time, like for example, my company matches 25% up to 6% of my income. So that's something to take in consideration. There's 2 percentage numbers that you're looking for. It's very rare for them to say, here's 3%, because I feel like that'll take way more work than just giving 0. It kind of feels just like a slap. So I'm pretty sure that it's a matching up to 3%. And then we need to find out what the match actually is. But 3% is 3%, even if that's true. Apple offers dividend opportunities. Yeah, we're probably at that part of that thing. I get to be an independent contractor. So Sophie, you can actually, if you have like, say, your own business, and you could have like a tutoring thing, or you can have one client with a regional center, you can create your own 401k. It's called a solo 401k. And you could even create a solo Roth 401k where you don't pay capital gains if you're trading, if you reach retirement age. That's a fake concept, but just a shortcut. There's no such thing as that. You can access that money. So I hope that is helping. great in some ways because I get good write-offs. Lack of benefits is kind of meh. Yeah, I get you. I get you. I used to do independent contracting for ABA as a BCBA. You get a lot of credibility there, fluidity there. It's okay to not have one if you create your own, because as an independent contractor, you're often paid handsomely for your lodging. You can say more. Godspeed, Godspeed. Texas Investing, you have a question. You raised your hand. What's up?
It's not more or less of a question. It's just, you know, I wanted to bring up the investing journeys real quick and about the price that you mentioned, right?
I didn't pay
Considering,
them, I promise.
considering that someone in here did ask about it, I'm a part of the investing journeys and I'm excited for it. But I just want to point out to people, and you know, no one said anything. But I just still want to say it. The price that he does have it at, in my opinion, it's a great price. I say this because other people who are doing the same exact thing he does, for example, the Finance Cowboy, if you go ask him about his rental academy, it's $6,000. That's really that's not something that I would personally pay for, $6,000 for that. So I'm just saying that Georgie right here, you know, he's offering a great price for what he's offering to all of you. And then on top of that, the Legacy Investing Show, his is $2,500. Now, I'm not going to say nothing. I am a part of that, so I'm not going to talk shit. But still, Georgie's offering you the better price than both of those guys. He's probably going to offer you a better price than anyone else out there. And on top of that, he's honest with you, and he's just a fun guy. So that's that.
Oh, Mike, I probably should have paid you for that. That was pretty good. I needed to record that. Oh, I did record that. Let's go.
Awesome.
I appreciate that a lot. I really, really do. Yeah, I really do take the price into consideration. This is just large enough where it makes sense that you make money off of this bank farming journey. And again, I am updating this content. So every year there's new deals. So I want this to actually pay you $400 a year. And Mike, who actually went ahead and clicked all my links, is up already $800, just to show that this does work. But I'm also not just focusing on the stock market. There's behavioral budgeting. I don't want you guys depriving yourself of what you love. There's a way to do this, and we're going to do it together. I want you to focus on crypto and NFTs. A lot of people who just talk about stocks, they don't talk about crypto and NFTs. I lost 1,000 followers on Instagram for talking about crypto opportunities and NFT opportunities because people are not ready. And when, you know, I'm kind of a bubbly personality, and if I'm losing followers over this, then maybe we're at a bottom of the market where there's just so much hate and fear that people lost tens of thousands of dollars, and I don't blame them. Like, so many platforms went under. I got hurt in that process. I had 2 platforms with thousands of dollars go under, but crypto dropped so much that I basically broke even with the opportunities of buying the same amount of coins. So I do want everyone to know how this works, because if that takes off, sheesh, it might not take off, but I have a feeling that some aspect of the Web3 space, what's happening in crypto and NFTs, will take off. But I do want everyone to focus on the classics. I'm also going to talk about the psychology of money, raises, negotiations. All of this is hand in hand. And I probably should charge what Cowboy's charging. I actually really love that guy. He's awesome. Get more than your 3% raise, speed up income growth, retirement planning. So I go all in, investing for kids. I want this to be something that is literally wholesome. Everything is in here, which you know, it's tough to do because people are like, I just want to learn about crypto. I just want to learn about credit cards. And I'm like, okay, but it's all connected. It all intersects. It's like when people say, let's talk about race. We can't talk about race without talking about age, without talking about gender, without talking about history, right? Because even communism is different, say where we at? In Russia and China. Those had different communisms, right? So yeah, I went off topic there a little bit. Your boy Mike hyped me up. He hyped me up. Let's see what other questions we have here, and feel free to interrupt me. Feel free to interrupt me and just go in. I think I pretty almost caught up here. Let's see, balance transfer got up to 5% sometimes. Yes, so a lot of credit card debt is increasing, but so is high interest savings accounts. So you can get up to 4% from a high interest for a high yield savings account, such as Wealthfront. They will pay you 4% for holding your money there. Now, usually when they pay that much, that means there's opportunity elsewhere. And of course, not everyone is in wealth building mode. There's people who are preserving wealth. And that's a different investing strategy, right? You're more conservative with your strategy at that point. But if you're just building your wealth, conservative ideology has to be set aside. Diversification is key, but your first year, you could go all in, right? And then diversify over the years. Now, depending on your age, right? And your privileges and your other needs. I get too hype about this, but yeah, I cannot wait to launch this. This will be so much fun. Guys, anything else on your mind? I will probably send you an email tomorrow with a coupon code. You can message me for a coupon code. I cannot wait for this to launch. Expect kind of like a lot about this because this is my kind of second child. Stock Market 101 was my first. This is my second baby. For the record, I was not bashing Finance Cowboy or Legacy Investing Show. They're both very wonderful people who I've gotten to know over the year. I can't really say much considering Cowboy did offer me the course cheaper. However, Georgie is the real deal when it comes to opportunities in the stock market, etc. Thank you. I appreciate you. You love your holistic approach and teaching and membership. Francis. Okay, guys. With that being said, I love you all. I am gonna head out unless there's one more question, anything like that. Feel free, snipe me, message me on Instagram, financialism, and I'll be waiting for your messages and discount codes and all of that. This is here's an image of my journey for anyone who cares. Hopefully, you'll have a great journey, investing journey as well. And expertise in the car loan
Thank
business.
you.
Yeah, of course, I got you.
I want to tell you also.
Oh, thank you. Thank you.
Thank you so much for doing this. I'll message you. Bye.
Of course. All right, guys. Peace out. Good luck tomorrow. Happy holidays. Let's go. Hopefully you have a few days off. And if you don't, hustle. All right, guys. I will see you. Take care. Take care. Love you all.
Here.
Bye. All right. I'm gonna close this.
Happy holidays. Bye bye.
Bye, guys. I'm gonna eat my cookie.